Reading out of the old reference guide to regulatory compliance on page 596, I am reading the Bank Holding Company Act, which is unusually long. So I may be going subsection to subsection. The Bank Holding Company Act, the Change in Bank Control Act, and the International Lending Supervision Act are implemented in Reg Y, bank holding companies, and change in bank control. This regulation has several purposes. One purpose is to regulate the acquisition of control of banks. Another is to regulate the types of non-bank activities in which a bank holding company may engage either directly or through a subsidiary. The regulation also contains capital adequacy guidelines. The Federal Reserve Board amended Regulation Y in 1997 to streamline its reporting and application requirements and to ease some of the anti-tying prohibitions, and again in 2000 to add provisions allowing for the creation of financial holding companies and their financial activities. The Gramm-Leach-Bliley Act of 1999 expanded the powers of bank holding companies by allowing them to become financial holding companies. A financial holding company can be owned by a bank or a non-bank entity. It may engage in almost any type of financial activity, including the sale of securities and insurance underwriting and sales. Merchant banking is another allowable activity for a financial company. The Federal Reserve Board is the governing entity for financial holding companies. Their regulations will be added to the current Reg Y. The Federal Reserve issued interim regulations in 2000 to cover these activities. Coverage for Reg Y. This regulation covers bank holding companies and subsidiaries of bank holding companies, as well as certain foreign banking associations. Roman numeral 2, general restrictions on corporate practices. A, for bank holding company operations. 1, a bank holding company must conduct its operations in a safe and sound manner. 2, a bank holding company must operate to provide a source of financial and managerial strength to its subsidiary banks. 3, bank regulatory agency may require a bank holding company to terminate any unsafe practices or may terminate the bank's holding company's control of a subsidiary. And 4th, bank holding companies must comply with the interagency guidelines establishing standards for safeguarding customer information. Letter B, under general restrictions on corporate practices, is the purchase or redemption of bank holding companies' own stock. Starting with 1, an institution must file a prior notice with the Federal Reserve Bank if the price of the securities plus the net paid for the same securities within the previous 12 months equals or exceeds 10% of the company's consolidated net worth. Notice must set forth A, the purpose of transaction, B, description of securities being purchased or redeemed, and C, the number of each class outstanding. D, gross consideration paid. E, terms and source of transaction funding. F, description of all equity securities purchased or redeemed within the previous 12 months and net consideration paid, gross consideration for purchases minus, which in parentheses, the net consideration paid is the gross consideration for purchases minus proceeds from the sale of owned securities, and any debt incurred is also part of the description being set forth in the notice that goes to the Federal Reserve. The current and pro forma consolidated balance sheet if the bank holding company has assets of over $150 million, and the current and pro forma parent company only balance sheet for bank holding companies of assets of $150 million or less. Federal bank approval required for the purchase or redemption of bank holding companies' own stock. The Fed must approve or refer to the Fed within 15 days of receipt of notice from the bank holding company, and if referred to Federal Reserve Board, the board will act within 30 days of notice to the Federal Reserve Bank. The Federal Reserve Board may disapprove if a proposal would be unsafe or unsound or would violate any law or regulation. If the Federal Reserve disapproves, banks may request a hearing within 10 days of the notice. If Federal Reserve Board finds that a hearing is appropriate or that there are material facts in dispute, the Federal Reserve Board will schedule a hearing. Bank holding companies that are well capitalized and well managed and that are not the subject of any unresolved supervisory issues are not required to obtain approval before redeeming or purchasing their stock. Insurance requirements. Every bank that is a bank holding company and every subsidiary bank of a bank holding company must obtain FDIC insurance. Banks that act as transfer agents of securities are municipal securities dealers or act as a clearing agency must follow the disciplinary sanctions and notice rules of Regulation H. Any executive officer or director of a bank holding company, the shares of which are not publicly traded, must annually report to the board of directors any credit outstanding to him or her that is secured by the stock of the bank holding company. And my question in the margin is, in what form is this notice to be made? Other general restrictions on corporate practices or just general operating procedures is that bank holding companies and their non-bank subsidiaries must file appropriate SARs. Intraday, so letter G, intraday extension of credit by a bank to an affiliate company engaged in underwriting, dealing in, or making a market in securities must be on market terms and conform to Section 23B of the Federal Reserve Act. An extension of credit by a U.S. branch of a foreign bank to an affiliated company engaged in underwriting, dealing in, or making a market in securities must be on market terms and conform to Sections 23A and 23B of the Federal Reserve Act. Just general requirements of capital planning. Letter H. Capital planning requirements apply to every top-tier bank holding company domiciled within the U.S. with consolidated assets of greater than $50 billion or that is subject to this section by order of the Federal Reserve. Based on the institution's size, level of complexity, risk profile, scope of operations, or financial condition. 2. Under the capital planning process. Bank holding companies that are subject to this regulation must annually develop and maintain a capital plan. The capital plan must be submitted to the appropriate reserve bank, and prior to the plan submission, the holding company board of directors must review the robustness of the process of review, capital adequacy. I find a lot of fragments in this text. Review the robustness of the process of the review of capital adequacy and ensure that any deficiencies in the review process are remediated appropriately and approve the capital plan. 5. Capital plans must contain the following elements: A through F. A, an assessment of the expected uses of the capital over the next 9 quarters based on the holding company's size, complexity, risk profile, scope of operations, and assuming both expected and stressful conditions, including estimated expected revenues, losses, reserves, pro forma capital levels, and any other measure deemed to be relevant. This should include any stressful scenarios provided by the Federal Reserve and at least one provided by the holding company. It should also include a calculation of the pro forma Tier 1 capital ratio with a discussion of how the holding company will keep the capital ratio above 5%, even under stressful conditions. B, a discussion of the results of any stress tests. C, a description of any planned capital actions, for example, issuance of debt or equity instruments plans. D, a detailed description of the holding company's process for assessing the adequacy of capital, including how it will, under stressful conditions, maintain adequate capital and serve as a source of strength to its subsidiaries and continue to meet all financial obligations. E, the holding company's capital policy. And F, a discussion of the holding company's business plan and its expected impact on capital. 6. Upon a request of the Federal Reserve, the holding company must submit information on the holding company's financial condition, structure, on and off balance sheet exposures, policies and procedures, including those related to risk management, liquidity profile, management, and any other relevant information requested by the Federal Reserve. A holding company must resubmit its capital plan within 30 days, may be extended to 60 days of the occurrence of one of the following. That's A, B, or C. A material change in the holding company's risk profile, financial condition, or corporate structure. B, the Federal Reserve Board or appropriate Reserve Bank objects to the plan. Or C, the Federal Reserve Board or appropriate Reserve Bank directs the holding company to revise and resubmit the plan because it is incomplete, it has material weakness. There has been or will likely be changes in the holding company's risk profile, financial condition, or corporate structure. And last, the stress scenario developed by the holding company is not appropriate for its business model or portfolios. Number 8 under the capital adequacy or capital planning section. When reviewing a capital plan, the Federal Reserve will consider the comprehensiveness of the plan, the robustness of the capital planning process, the analysis and reasonableness of assumptions underlying the plan, the ability of the holding company to maintain capital above 5% during stress circumstances, any regulatory or supervisory information about the holding company or its subsidiaries, the holding company's financial reports, the Federal Reserve's own pro forma of the company's revenues, losses, and reserves, and lastly, any other information it deems relevant. 9. Under capital planning, after reviewing the plan, the Federal Reserve Bank will either object to provide a notice of non-objection by March 31st of the year the plan was submitted or within 75 days of the receipt of a resubmission. And 10. The Federal Reserve Board or Reserve Bank may object to a plan if it determines that a holding company has unresolved material supervisory issues, or the assumption or analysis in the plan are not reasonable or appropriate, or the holding company has not demonstrated an ability to maintain capital above 5%, and the capital planning processes proposed distributions constitute an unsafe or unsound practice that would violate the law or regulation. 11. Under capital planning, if the Federal Reserve Board or Reserve Bank objects to a capital plan, the holding company may not make capital distributions without approval. 12. If there is an objection to the plan, the holding company may request reconsideration or a hearing on the plan. The request for reconsideration must contain an explanation of why reconsideration would be granted. 13. Even if a non-objection notice is received, a holding company may not make a capital distribution without approval under the following circumstances. After the distribution of Tier 1 capital would be less than 5%. After the distribution of Tier 1 capital would be less than 5%. B. The Federal Reserve Board or Reserve Bank notifies the holding company that a distribution would result in a material adverse change to the company's capital, liquidity structure, or that the earnings were underperforming projections. And lastly, the distribution would exceed the dollar amount in the capital plan. Under capital planning, a holding company may make a distribution that exceeded the described in the capital plan if the holding company would be well capitalized after the distribution. B. The holding company's performance and capital levels are and would be after the distribution consistent with its projections. C. The annual aggregate dollar amount would not exceed the amount in the company's capital plan for which it received a non-objection. D. The holding company provides a notice of the transaction to the Federal Reserve or the Reserve Bank and receives no objection after the notice is provided. 15. A request for capital distribution must be filed with the appropriate Federal Reserve and Board and contain either the current capital plan or an attestation that there have been no changes since the last submission. Contain the purpose of the transaction. Contain a description of distribution, including for redemptions or repurchase of securities, the gross consideration to be paid in terms of sources of funding, and for dividends, the amount. And lastly, contain any additional information requested. 16, under capital planning, the board or appropriate reserve bank must act on a request within 30 days. And lastly, under capital plan, if request is disapproved, bank holding company will be notified in writing and within 10 calendar days of receipt, make a written request for a hearing. If deemed appropriate or material facts are in dispute, a hearing will be ordered within 10 calendar days in accordance with this part of the Code of Federal Regulations.